John Higgins, Mortgage One. Happy Monday. So last week I mentioned we have a federal open market committee meeting coming up at the end of the month. Last week it was nearly a coin flip. This week things changed dramatically, a lot of volatility in the market. So now we're down to nearly a 1 in 8 chance. So the market's looking at the inflation data that came out last week and have really cut the chance of a rate hike this month. Doesn't mean that a rate hike might not happen later in the year. That is all dependent on the data that comes out. But for the moment, we look safe at the moment to not see the Fed actually cut rates. A couple items that I saw in the news that I wanted to bring out. The median U.S. home price rose 2.2% year over year. So we're gaining on that plus 400,000 mark. New listings have trended down. That's not good. The summers typically, especially in June, we're still seeing inventories grow, but a little bit of a retreat there. As far as the long-term investment outlook for people out there, it is real estate still. So we do talk to our clients over and over and over again about the importance of adding real estate as a way to build net worth. And this continues to show that people not only see it in their portfolio and that, but believe in that. So real estate ranks higher than stocks and bonds and Bitcoin, the whole bit. So what are we seeing on the affordability side? Well, even though interest rates are not coming down, we are seeing the affordability index go above 100, which means that it's gone positive. That's great for our home buyers. We know affordability has been a huge issue as home prices have gone up and rates have gone right with them. Consumer sentiment also up over June. That's good. We need confident buyers that know that they're going to have a job and that their incomes are going up. So good news from the University of Michigan. We'll take all the good news we can get. Where are we at on the 10-year Treasury? Well, we're continuing to kind of play in that range that's bouncing off 4.6%. That is kind of a key threshold. We'll have to watch that. The geopolitical stuff as it affects oil, which will influence inflation, really been a problem lately. And we're hoping we're going to get below 450 here and stay below it sometime soon, but need a few more data points probably to come out and maybe a resolution, another ceasefire in the Middle East. What does that mean for our mortgage rates? Well, they continue to pop up. So we're at 655. Last week we're at 649. We're seeing a week over week increase here the last several. Not good, again, for affordability for our home buyers. Certainly not good news for our sellers that are kind of waiting for lower rates to put their house on the market. Did want to bring out a very interesting mortgage program that's out there. If you work with investors, hopefully you've heard of the DSCR mortgage. It's the debt service coverage ratio mortgage. For our investors, instead of qualifying based on their income, we're actually using the income of the property. So a lot less documentation needed for this program. Pretty easy to do. We can actually close in the name of an LLC, which is kind of cool. And, the way we do it, we look at the rent that is brought in and we put that over the payment that is garnered on the terms of the mortgage. If we are above 0.75, so it doesn't even have to be a 1-to-1 ratio, we can offer some form of mortgage financing. Rates and terms do vary based on the coverage ratio, so the more rent that's coming in, oftentimes the better the rate. But great program for your investors. Lots of investors are offering this type of program. Would love to chat with you about the needs of your investors and get them into one of these great mortgages. Don't forget about our Move to Marketing Studio. I bring this up nearly every week because I really do want to help you grow your business. This is a great program. We offer it for free for our realtor partners. Certainly give me a call about this anytime. We'll talk to you next week.